Welcome to Trading Lounge and the European indices for Monday, August 29. So the main point is obviously making money. So our next short trade is going to be counting 5 waves in this little leg here. Once that's completed, we'll look for a retest, and it will be that corrective rally retest that we'll look to short, and we'll do that in a couple of different ways, and we'll talk about that. So if the market's going to go further down, we're going to be on that again. So let's just look at the bigger picture for a moment. When we're looking at the US markets, we've been looking for this move at the low here going up as wave A, and then a B, and then a C wave. Now it may end up coming down further, and obviously if it takes out these lows here, then we'll be obviously going down further. So what we may need to do is we may need to bring this this ABC pattern over here into this situation here, like that. Or we could also look at the bigger pattern as the A wave here, the B wave here, and a C wave here as well, and then move down from that point. Okay, so there's a couple of different ways of looking at this. It's the same with the S&P 500. We're looking, this is the daily chart, we're looking down as an ABC for the A wave here, an ABC for the A wave, an ABC here, 5 waves down here for the B wave, and then moving up here and then coming down. So we're going to have a bigger bear market as such, a bigger correction. That's not my problem. The problem is do we come down from here, or do we have that move back? So we need to be a little bit cautious about things. We have opinions, and our opinions can get us into trouble. So we need to stay with the evidence as we go, and look for trades in between things. So yeah, that's where we are here. But yeah, so the same thing can occur here. This B wave here, we could squash all this up here for the A wave here, the B wave here, and the C wave here, and have this B wave sitting over here, and we can come straight down from that point. So that would look like this here on this chart that we've had here for a while. So yes, so that would be that coming down further. Now the thing is that, as I mentioned, coming up into here, the idea was that we could see that the markets were bullish, and everybody was talking about it being bullish, and you're back in the trend and all the rest of it. But we understood and pointed out that the market can turn at this point. We had a bullish count as well, but we also understood that the market could turn at this point, and not to get too involved in the long side of it in your mind. And that will be the same thing for the short side here as well. Yes, it looks extremely bearish, I understand that, but what I'm saying is we won't get lost in that bearishness. We'll keep our head screwed on, and we'll just go inch by inch, step by step, and we'll make our decisions as we go. But because there would be nothing worse than thinking that you're bearish, and for some odd reason the market continues down a bit and then has another leg up here and then goes down, because that's a very high probability. Both of them will give equal weight to, and we'll treat them accordingly. So that's what we'll need to do with this market here as well. That said, let's just go to the intraday now. So yeah, we're looking for the retest of that 13,000, or at least a corrective rally. Normally it goes back and tests it. It's a big number, it does that. So just going to the 100 tick. So last time we spoke, we were looking for we had the top in here. We counted down as 1, 2, 3, 4, 5 for the A wave. We're looking for a B wave. Now the B wave didn't come back very far, and we could also have an alternative 4th wave here and look for a 5th wave down here as a low. And then in that case, if we were looking for a bigger bear market, we would be looking at this as 1 here, and then we would come back for 2 over here. But this sort of thing is not really in line with what what the US stocks and that are doing at the moment. So we kind of got to bring, every market's individual and should be treated that way. But as a whole, they tend to sort of move together. So we need that consensus of what's actually going on in the market. So yeah, we just got to go step by step. So anyway, from the top here, we can look at this as 1 and 2 and 1 and 2 and 3 and 4 and 5 for the third wave, fourth wave. I'm looking for the fifth wave here. So this will be 1, 2, 3. So it'll be third, fourth, fifth. So it's probably going to come down a little bit further. So for short traders, if you're lucky enough to short it up here somewhere, or even under here, would have I mean, it's just hindsight, but the market came down here and retested, so that means that you could have shorted under, coulda, woulda, shoulda, under here, or even under this one here at that point. You know, so there was plenty of ways to get into this market, and hopefully that you've done that. You may have traded to the big no and got out, and I would have done the same thing as well. So what we're looking for here now next is for this to finish off here, and then looking for some sort of corrective rally that we can view here, and then we can look to short this under here. If you're currently short at the moment, just use trading stops. So with the US markets, we're looking at this, and US stocks and US banks and so on. We're looking at, you know, when this is looks quite big here and you know, sort of dangerous, but when we look at, say, US banks for a moment, JP Morgan's, we're looking down at the A wave here with an A wave here and a B wave here, then wave 1, 2, 3, 4, 5, and finishing off. So what happens if that's correct? You know what I mean? If that's 1, 2, 3, 4, 5 and finishes off here and then starts to go up, you know, but well, the rest of the world will do the same as well. So this is why we've got to be a little bit careful, and this is why we want this to finish off here, and we'll have this corrective move here, and then we'll be looking to short, you know, here and here, and we'll talk about that when we see the rally starting in the next session. So that's the type of thing that we're looking at to move on down. So yeah, I'll just leave it at that, but that's what we're looking at. We're looking for a wave 2 rally. Will it go back to this point? Is that the low? I still think there's a bit more. This will be like wave 1 here, this will be like wave 3, so we need 4 and 5 to finish it off, so it's going to drop a little bit lower in all of that. So that's that, and the stock 50 will be the same as well. So we didn't quite get to our target area up here. We talked about shorting. I didn't give you a clear signal on to short it, but hopefully you would have gravitated to the lower end of group 2, the 3660, 3650. So group 2 is this, the 72 and the 80 here. So becoming that resistance there, that you know, that should have been shorted at that point, but obviously I'm in Australia and it's hard for me to do everything and get everything perfect. So yeah, so it's a wild world. So, but still, once again, we want this to finish off. We'll probably try to come back and cover these gaps on the futures market and stuff, but we need to find that wave 2 coming into play. Okay, so that's what our next task is. And for the FTSE was a little bit cleaner because I had the lines through here, so we're looking to short here. You may still be short at the moment. Once again, we're looking for this to finish off as well, probably gravitate down here somewhere, and then we'll look for, I'm probably drawing this too big here actually, but we're just looking for some type of, you know, corrective move to the upside here. That's what we'll be looking for, and then we'll look to short that as well. This is a slightly different pattern here. If we just go to the daily chart for a moment. So with this market here, we've been looking, you know, we've been looking at a couple of different ways. So first of all, we can look at it here as an A wave, a B wave, a C wave, a D wave here, and coming down for the E wave here. So the E wave here can drop down. Well, the thing with triangles, they can just pull back a long way, but let's just put it there for the moment, this in this area here, but I think it can come lower than that. We were also looking at the positive side of the market, but that's not there, so we can get rid of that now. That's always nice. So I like to be cheerful and don't like to be all negative and doom and gloomy, but I like to chuck in a bit of positivity here and there and things that, you know. So we'll be looking also for some sort of little rally in here, and we could come down in 3 waves as wave E here. That could just sort of develop into that. We'll see. The other point here is that it also could come down much further as well within all of this. So we'll be aware of that as well, and we need to work through that. So over to the currency. So the US dollar here, we've been looking for a wave 4. That's a 38.2% retracement level, and we thought we had it here originally with a little ABC, a little bit small, a bit hopeful, but we had that 3 wave move there. We also had 5 waves up there, so the ABC pulling back was kind of like interesting, but it didn't pan out like that. So we need to call this the A wave, and then an A and a B and a C wave for the B, and then down for the C for 4. And then it's already gapped up here, so that's all good. So we're looking for 1 and 2 and 3, 4, 5, and it'll be the inverse for the foots for the euro here. I need to just these in here. So last time, whoops a daisy, just bring this over here. So last time we spoke, we were looking for, it jumped a bit higher here, but that's all good. So that wave 4 there, it's all played out. The safe trade was taking this low out here. So look, you may or may not have gotten into this here, but it doesn't really matter because it'll be the same as stocks as well. So we'll be looking down for wave 1, and then we'll just, you don't need to do much, we'll just look for the corrective move, and we can short that second retest at that point, or we can do low of wave B, but we do need that to finish off down here, so that could come a little bit lower at this point. Okay, so, and then we'll be looking for 3, 4 and 5 down here for that. I don't know if I talked about shorting it up here. Maybe you've done that, I don't know. But hopefully you've gotten something out of that. It's a bit of a wild journey, but there's still further to go down. Now that this has moved below wave B here, it's forced this whole pattern here to be corrective. So that means in due course we'll be taking out that low here. So that's the beauty of that. And also the cable as well, we're looking for that to move down lower, so that's doing that. And it will also have a little 1 and 2 in here as well. We can put that on the 18 here, because that's where that played out. I'm not going to go into this at all here, because it was I was just using it as a reference point for something or other. But the question here is from wave 4 to wave 5, do we just go into that distance down here at the 1.15 area and finish off, because we want 5 waves from that top down to here, and we've got wave 1 here at the moment. We need to go back for wave 2 in due course, and 3, 4, 5. So when we get here, that could be the low and here and that, but will that be the top in the US dollar index and all the rest of it, or will all of this just be wave 1 here, and then we've got wave 2 coming back, and then 3, 4, 5? I won't know that until this leg here starts. So it's just something we'll have to work through. Alrighty, thanks for tuning in. Cheers.